Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingale, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit of bank branches. And today is session 50 and we will discuss topic Forex and NRI account. So let's dive into it. Let me allow to share my screen. Yes. So in the previous session, we discussed government business audit and examined various operational, accounting, reconciliation, and compliance aspects relevant to concurrent auditors. So in today's session, we move to another highly sensitive and compliance-driven area of bank branch operations, Forex and NRI account. So this is an area where even a small procedural lapse can result in FEMA violations, RBI penalties, suspicious transaction risks, money laundering exposure, and regulatory reporting failures. So therefore, concurrent auditors have a very important role in ensuring the branch level foreign exchange transactions are compliant, properly documented, authorized, and reported. So today's session will comprehensively cover NRE, NRO, and FCNR accounts, FEMA basics every auditor must understand, foreign remittances and reporting system, common branch level violations observed during audits, documentation deficiencies, and operational red flags. So the objective of this session is not merely theoretical understanding, but practical branch audit applicability. So let's start with it. Let's understand importance of Forex and NRI audit. So Forex and NRI operations are among the most scrutinized activities in banking operations because they involve what? Cross-border movement of funds and foreign exchange dealings regulated under FEMA. So unlike domestic banking transactions governed primarily under banking regulation, foreign exchange transactions involve FEMA, RBI master directions, KYC norms, anti-money laundering regulations, international sanctions screening, suspicious transactions monitoring. So branches handling Forex transactions function under delegated authority from authorized dealer category 1 banks. So therefore, any non-compliance at branch level may expose bank to monetary penalties, FEMA contraventions, compliance failures, reputational risks, enforcement proceedings. So concurrent auditors here must verify whether transactions are permitted under FEMA, whether supporting documents are obtained, whether remittance purpose codes are correctly mentioned, whether account classification are proper, whether repatriation rules are followed, and whether reporting obligations are complied with. So this area requires a compliance-oriented audit approach rather than only accounting verification. Moving further, let's understand regulatory framework governing the Forex operations. So the primary legislations governing the foreign exchange transactions in India is Foreign Exchange Management Act 1999, commonly referred to as FEMA. So FEMA replaced FERA and shifted the regulatory approach from control to the management. So under FEMA, all foreign exchange transactions are either current account transactions or capital account transactions. Transactions are permitted unless specifically prohibited or restricted. Banks dealing in Forex require what? RBI authorization as authorized dealers. That is very much important. Concurrent auditors must understand the branches that branches do not independently operate the Forex business. They act under the delegated powers of the authorized dealer bank. So key regulator references include here what FEMA regulations, RBI master directions, FDI operational guidelines, KYC master directions, and anti-money laundering standards. So the guidance note on audit of bank emphasize the importance of compliance and regulatory vigilance in specialized banking activities. The Banking Regulation Act also specifically permits banks to deal in foreign exchange and foreign banknotes as part of the banking business. So moving further, let's understand types of NRI accounts. So what are NRE account, NRO account, FCNR account, resident foreign currency account, purpose and usability differences. So for concurrent auditors, Understanding this distinction between NRE, NRO, FCNR accounts is absolutely essential because audit observations frequently arise from improper account classification. So that is more important, whether that account is properly classified as NRE or NRO or FCNR. So the three major categories are non-resident external account, that is NRE, non-resident ordinary account, that is NRO, and foreign currency non-resident bank account, that is FCNR. So each category has what different repatriations rules, different taxation treatment, different currency denomination, and different permissible credits and debits. So improper operation of these accounts is one of the most common audit observation in the concurrent audits. Means once the classification gets wrong, everything would get wrong. So auditors should therefore verify the residential status declaration, passport and visa validity, source of funds, repatriation permissions, currency denominations, conversion procedures upon status change. The RBI master directions relating to NRE, NRO, and FCNR accounts from the operational basis for these accounts. Means this need to be taken care of, need to be verified. The RBI master directions. Moving further, let's see one by one NRE accounts. So NRE accounts are rupee denominated accounts maintained by NRIs for parking their foreign earnings remitted to India. So key characteristics here: account maintained in Indian rupees, fully repatriable principal and interest exempt from Indian income tax subject to applicable conditions. Funds must originate from the permissible foreign remittance of or transfers from other NRE or FCNR accounts. So common audit checks include here is whether resident credits are improperly allowed, whether local income is incorrectly credited, whether account holder continues to qualify as NRI, whether KYC documents are updated or not, whether document accounts are monitored. So auditor must verify that no prohibited local credits are allowed, cash deposits are properly explained, and PAN and FTCA compliance exists wherever applicable. So another important area is conversion of resident accounts into NRO accounts upon change in residential status. So branches often delay this conversation, leading to what? FEMA non-compliance. So let's understand NRO accounts now. NRO accounts are maintained for managing income earned in India, such as rent, dividend, pension, interest, sale proceeds, other domestic receipts. Unlike NRE accounts, NRO accounts are not freely repatriable. Interest is taxable and from the received from the NRO account. Repatriation is subject to the limits and documentations. Concurrent auditors should verify whether repatriation limits are adhered to, whether Form 15C or CB requirements are complied with. Now from 26-27, the form numbers are changed, whether TDS is correctly deducted, whether overseas remittances from NRO accounts are supported by documentary evidence. And one of the most common violations observed here is direct transfers of local residents income into NRE accounts instead of NRO accounts. So branches sometimes fail to distinguish between the foreign remittance inflows, domestic rupee income, which leads to what wrong account routing. So this becomes a FEMA compliance issue and should be reported appropriately if it is happened. Next, let's understand FCNR accounts. So these accounts are foreign currency fixed deposits maintained by NRIs in designated foreign currency. In designated foreign currencies, the major advantage here is protection from the exchange fluctuation risks because deposits remain in what? Foreign currency. So these accounts are generally maintained in currencies like USD, GBP, Australian dollar, Canadian, Japanese currency. So all this currency. Audit focus areas include here what? Correct currency handling, interest computation, premature closure treatment, correct conversion rates, maturity instructions, nostro reconciliation impact. So auditors should also verify here whether FCNR proceeds are wrongly converted or not, whether renewal instructions exist, whether interest rates comply with RBI or FDI guidelines. So branches handling FCNR deposits usually coordinate with the Treasury or a Forex centralized departments. Concurrent auditors must ensure proper accounting and branch authorizations. Moving further, let's understand FEMA basics for auditors. So a concurrent auditor need not become a FEMA legal expert, but must understand the at least basic framework of the FEMA. So FEMA classifies transactions broadly into the current account transactions and capital account transactions. Current account transactions include what? Travel, education, medical expenses, import-export payments, salary remittances, which are current in the nature. And capital account transactions include here investments, property purchase, loans, overseas assets acquisition. So this distinction is extremely important because current account transactions are generally permissible, but capital account transactions require what specific permissions or conditions. So auditor should verify whether transaction purpose matches the FEMA category, whether documentary support exists, whether limits are exceeded or not, whether approvals are available. The FEMA framework governing the borrowing and lending transactions between the residents and NRIs is specifically detailed under the RBI master direction. So we need to go through that particular directions. Moving further, let's understand residential status verification. So incorrect determination of data residential status is one of the most critical operational failures in NRI account handling. So the branch must establish whether a customer qualifies as a resident or non-resident, person of Indian origin or OCI cardholder. So concurrent auditor should verify the passport copies, visa validity, immigration details, overseas address proof, FTCI declarations, CKYC compliance. So many audit irregularities arise because of what? Customers return permanently to the India, but not updated or informed to the bank, but accounts continue as NRE or FCNR. So this is the practical situations happen. So this becomes a direct FEMA violation. So branches must convert the NRE or FCNR accounts into resident accounts or RFC accounts immediately upon change in the residential status. So auditor should verify whether periodic customer status reviews are performed or not. Moving further, let's understand foreign remittances. So foreign remittances are among the most sensitive operational activities in branch banking. Inward remittances involve foreign currency inflows into the India. Outward remittances involve transfer of funds outside India. So audit procedure should include verification of SWIFT messages, purpose code in verification of SWIFT messages, purpose code scrutiny, customer declarations, supporting documents, KYC compliance, and sanction screening evidences. So common documents include here Form A2, invoice, admission letter, medical estimate, importance document, import documentation, CA certificates. So auditor should also verify whether the remittance purpose aligns with the customer profile, whether transaction splitting exists, whether unusual patterns are observed. That is very much important. What the point, first point is whether remittance purpose aligns with the customer profile. That need to be checked. So high value outward remittances without economic rationale are major red flags here. Moving further, let's understand reporting requirements. So forex transactions require extensive regulatory reporting. Branches and centralized forex departments report through returns, FEMA returns, AML monitoring system, suspicious transactions reporting mechanism. So concurrent auditor should ensure that the transactions are correctly classified, purpose codes are accurate, timelines are followed, exception reports are monitored. So particular attention should be paid to structuring of remittances, frequent inward remittances, late transactions, and high cash activity in NRI account. So where suspicion activity exists, banks are required to escalate under the PMLA guidelines. So failure in reporting mechanisms may expose the bank to serious regulatory penalties. So moving further, let's see common violation observed in the branches. So let us now discuss the practical branch level violations commonly observed during the concurrent audits. So some of the most frequent observations are resident income credited to where NRE account. Local cash deposit is without proper explanation. NRE accounts continued after the customer becomes resident, means they are not informed to the banks. Improper overseas remittances, missing Form A2 documentation, lack of purpose code validation, non-updated KYC records, transactions beyond the delegated authority, improper handling of the dormant NRI accounts. So auditor should also watch for what? Round-tripping patterns, suspicion inward remittances, third-party transactions, and large cash deposit followed by overseas transfer. So these operational lapses can escalate into FEMA contraventions, AML concerns, fraud risks, and regulatory penalties. Let's see documentation issues. So documentation deficiencies are among the longest audit concerns, means largest audit concerns in the Forex operations. So even where transactions may appear genuine, lack of documentation creates what compliance exposure. So concurrent auditors should verify and taken care of the passport and visa copies, PAN details, FTCA declarations, FEMA declarations, Form A2, customer request letter, supporting invoices, repatriation approvals, tax compliance and documents. So branches often rely excessively in the customer relationship without documentary discipline. So auditors must remember here in Forex operations, documentation is the primary thing. Evidence of FEMA compliance means the primary evidence of the FEMA compliance. If a documentation is incomplete, transactions validity becomes questionable, transaction validity becomes questionable, regulatory reporting becomes unreliable, and audit trail becomes weak. So hence documentation verification should be exhaustive. So audit approach for concurrent auditors here would be a company should adopt a risk-based audit approach while auditing the Forex and NRI operations. So audit process should include what? Review of branch Forex authorizations, verification of delegated powers, sample testing of the remittances, KYC and customer due diligence review. Also taken care of verification of supporting documentations, examination of suspicious patterns, review of the exception reports, review of overdue compliance items. So auditors should particularly examine what high value outward remittances, dormant NRI account activations, large cash transactions, sudden transaction spikes, multiple inward remittances. So professional skepticism is extremely important in this area. Now, very important, let's understand red flags and risk indicators. So, Forex transactions are vulnerable to what? Money laundering, layering, terror financing, so Hawala type transactions, and trade based laundering. So, therefore, auditors should identify the red flags, which is or which has frequent small remittances, sudden large remittances, or transactions inconsistent with the occupation, multiple unrelated remittances, circular movement of the funds, immediate outward remittances after inward cost, and use of document accounts. So the RBI fraud monitoring framework emphasizes what? Early warning signals and timely reporting mechanisms. So concurrent auditors should escalate suspicious observations immediately through the proper reporting channels. So moving further, let's understand key concurrent audit reporting areas. So in concurrent audit reporting, observations relating to the Forex operation should be precise, evidence-based, compliance-oriented, and risk-classified. Report should clearly mention nature of violation, FEMA implication, transaction details, customer impact, financial exposure, and corrective recommendation. So auditors should avoid what the value reporting. For example, instead of writing documents not proper, report specifically Form A2 not available for outward remittances of USD so and so processed on specific date. So clear reporting improves what management response and accountability. Let's see practical recommendations to the branches. So concurrent auditors should not merely identify deficiencies but also provide the practical solutions or recommendations to it. Important branch level recommendations include periodic review of NRI customer status, strong documentation controls, purpose code validation, staff training on FEMA, and monitoring of unusual remittance activities. Also strengthening maker checker controls, very important. Centralized scrutiny for high value transactions and timely closure of the compliance exceptions. So Forex operations require continuous vigilance because regulatory expectations are increasing every day by day or every year. So let's conclude with the Forex and NRI account operations represents what one of the most compliance sensitive areas in branch banking. A concurrent auditor must understand that the Forex credit is not merely transaction checking. It is deep into the essentially a regulatory compliance audit. The auditor's responsibilities include here FEMA compliance verification, documentation scrutiny, KYC validation, risk identification, then detection of suspicious activities, reporting operational lapses promptly. So the quality of the document audit in Forex operations significantly contributes to regulatory compliance, fraud preventions, AML subtypes, and reputation protection of the bank. So ICI guidance note on audit of banks highlights the evolving complexity of banking operations and the need for auditors to remain updated with the regulatory developments and risk management practices. So that's it for today. Thank you. Thank you so much for patient hearing. If you have any questions, observations, suggestions, anything, then you can let me know via WhatsApp, or you can also email, comment below the video. Thank you. Thank you so much. If you are not yet subscribed Tax YouTube channel, then do subscribe for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on the Tax YouTube channel. Thank you. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.